the ASX financing environment for junior miners changed in recent years, especially around capital raising?
Yeah, the equity capital markets have been in a particularly tough space recently. Obviously, that's driven by macroeconomics and geopolitics and all the rest of it. As we discussed earlier, the gold sector is quite strong. We're in that period where we're seeing lots of M&A in the gold sector, but there is certainly a lot of players in the junior gold space raising money and exploring, which the industry needs. And I would like to see more of it. I believe the TSX or Canada is even tougher than the Australian market at the moment. So it's actually quite difficult. We are seeing more and more companies going to other forms of finance than the traditional capital raise. So we're seeing in Canada particularly see lots of streaming and royalty type deals to fund early stage projects. And we're seeing the emergence of private equity playing a bigger role in the junior world. So I think it's changing. Whether that's for the better or the worse, time will tell.
So, as you mentioned, what's your view on the growing role of non-traditional capital, such as private equity or Asian industry capital in junior resource investment?
Oh, listen, in the copper world or base metal world, investment, early stage investment by strategic partners, smelters and traders and what have you is becoming increasingly important to help junior development companies progress their projects. It's a really tough world out there. It's almost impossible to do it off the back of just pure equity. The banks are becoming very gun shy as well. So the resource sector needs that type of investment. We are seeing private equity playing a larger role. There's some significant players here in Australia. They're obviously highly sophisticated investors, and they pick their projects and their management teams very carefully. But it's becoming a more significant form of funding. We haven't seen the emergence in Australia of the royalty and streaming companies, but I'm sure that's on the rise as well.
How do you see current valuation for ASX listed gold and copper companies? Any standout trends or names?
Well, I think some of the valuations on gold companies in Australia are eye-watering. It's interesting. You've got a major copper gold discovery in Mongolia that's going to transact at approximately $180 million. And I'm aware of a 2 million ounce project that's going to transact shortly for $2.4 billion. So there's a real difference there, and it goes to perceptions of risk and time flows to cash flow. So gold is very strong at the moment, particularly in Australia. Copper companies, particularly pre-development copper companies, can struggle again because of the capital and the time and the effort to get these things into production. I think a lot of the big investors are waiting for those projects to progress a bit further before they get in. So it's a bit tough in the copper world.
How do geopolitics and policy shifts affect the long-term appeal of Mongolia and Indonesia for resource investment?
Well, as I said, in Indonesia, the contractor work system from these up until 2008, when the law changed, was very strong. And as Indonesia evolved in the post-Suharto period, it's become one of the strongest economies in the world. They're yet to have an environment where I would consider junior friendly. They're very, very strategic with in-country processing and other policies that have seen nickel in particular boom in Indonesia. But we're not seeing the grassroots exploration there, and I think that's got to change. For Mongolia, as I said, no juniors, no majors. So I think our project, Xanadu's story, is very important. I think the junior world's watching it, and it would be very good result, not only for Xanadu, but for Mongolia to see a success there. It's a model that can work. However, the fundamentals of securing tenure on prescriptive ground, progressing a project, and then being able to trade that project with a very clear tax platform is not there yet. And I think, the development fiscal settings around taxes, royalties, and other fiscal settings really important. And the trouble is, the Mongolia, it's a double-edged sword. It's a young democracy, which is exciting, and they're growing up as a company. And as I said, like Indonesia 20 years ago, but because it's such a small country, the politics see the government change on a regular basis, and we've just seen that happen again. So the policies change, and what Mongolia needs is a set of policies that foreign direct investment can rely on. The headline royalty numbers are uninvestable. No one will build a mine with 18% royalty or whatever. And I'm not being critical of Mongolia there, because Queensland did it to their coal miners, a couple of years ago. And we haven't seen a dollar go into Queensland since. So, but that royalty number is just silly, and it cannot be sustained. And what I say to people is, you can take 60% overall economic benefit of a mineral project, and your industry might be $10 billion, to use a simple number. So it's worth $6 billion per year to Mongolia. You can take 40%, and your industry might be $20 billion per annum, which is $8 billion to the country, or 100, which is $40 billion to the country. So, you can take a big slice of the pizza, but you're only going to get a small pizza. Or you can take a balanced part of the pie, and you might have a huge industry. And I think that's the opportunity for Mongolia. Get the fiscal settings right, and you could have a magnificent, sustainable mining industry. And don't be too caught up in Rio Tinto Oyu Tolgoi, because that's not normal. That's the fourth biggest deposit mine in the world. It's had an incredibly difficult journey, and it's only a company with the strength and resilience and balance sheet of Rio that can do it. So I think the whole Central Asian fold belts are highly prospective for, world-class discoveries, and those countries, including Mongolia, need to encourage that foreign direct investment. So it's certainty. We want a competitive policy, we want a clear policy, and we want a consistent policy. If you get those things right, then the mining and the exploration will come.
How can juniors stay financially resilient and investor-friendly amid copper volatility, rising costs, and ESG pressures?
Listen, those things all impact producers a lot. Not so much explorers, because the fundamentals are, as we discussed at the start, that there's a structural deficit coming, if not here already, for copper supply. So, raising money and being strong with a business model that says we're looking for and delivering copper is you've got to spend as much money as you can in the ground. You have to do what you say you're going to do. And it all comes down to management credibility, and progressing to create tangible value. And I'm very proud of what the Xanadu team's been able to achieve in that respect. But it's also very tough, right? You don't have any profit until a project goes into production, and we're generally playing in the space before that time. So we need to create value through through developing and growing projects.
How might Australia tighter critical minerals and foreign investment policies shape mining finance deals and merge and acquisition?
So everybody throws around the word critical minerals, and what does that mean? Because the list is different in different countries. I certainly believe that copper is a critical mineral because it's just tied to everything, right? And we've seen just today what the US government's thinking about copper. Australian policy has been, China is our biggest export partner, and most of Australia's iron ore goes to China. And we also export gas and coal and many other commodities. I think talk of critical minerals and restricting or interfering with the market is difficult. In the rare earth space, I'm sure attracting government funding and attracting offtake partners and what have you, the government would prefer that those were with, countries other than China. But the reality is that's where the offtake contracts are. So, ultimately you've got to do what's best for your shareholders. Australia's treading a fine line between its alliance with the US and its dependence on China. So it'd be interesting to see how that carries forward.
With over 30 years in the mining industry, what key factors will drive junior explorers' success in the next 5 years amid rising competition and limited capital?
Nearly 40 years now. The first part of my career was with Newcrest Mining, which is a very large company. Well, it became a very large company, and it was the one survivor of that generation of gold miners, and was off the back of exploration and innovation. So Newcrest was a very good explorer up until the merger with Lihir Mining. All of the deposits owned and operated by Newcrest were discovered by Newcrest. And that's not the case these days with big miners. Newcrest also was a really early adopter of block cave mining in the gold sector and got a huge head start on the rest of the industry, and also a very early adopter of copper-rich gold deposits to create that byproduct credit to reduce all-in sustaining costs. And I think those things are the major reasons why Newmont eventually took Newcrest over. So the value was created in exploring. So in the junior sector, a lot of these big companies now, they explore, but they leverage off the junior sector a lot. And we've seen BHP with its Explore program, putting money into selected junior companies, which gives them an exposure to projects and jurisdictions they might not otherwise be in. And I applaud that approach from BHP. It's quite innovative. So, but you've got to do the work, right? As I said earlier, you've got to peg the ground. You've got to generate the targets. You've got to test those targets. And then, if you make a discovery, you've got to push through the green and the red tape and the financing and all of that to get these projects into production. And the time it takes to do that has become longer and longer and longer. So I think junior companies need authentic management. They need good projects, and they need execute. When they raise money on a promise, they need to deliver on that promise. And, that's easier said than done, but, and I think the majority of juniors out there are trying to do that, but it's a very crowded space. I would like to see more investment by the larger companies into the junior sector, either directly or indirectly, to ensure that those boots are on the ground and those rocks are getting whacked, by people whose reason for getting out of bed is making a discovery.
What important moment in your career most shaped your approach to value creation and risk management?
Personally, well, as I said, I had a long and successful career with Newcrest, and I learned a lot about exploration, development, and mining operations. So I'm a bit of a unique character in that I've got great exposure to all of those phases. In 2015, a decade ago, I left the company and was given the CEO role up at Kharmagtai Copper-Gold, the first CEO, and was very proud of that achievement, building the Tuju Bukit mine. But, to be fair, up until 2015, I'd had to battle internally for capital from a company that had a good, strong balance sheet most of the time and was able to fund its own exploration. Since that, the last decade, I've spent my entire life looking for money, trying to sell, an exploration story, management credibility, trying to get those runs on the board. So the sliding doors moment, I think, was leaving Newcrest and getting into the junior world where you're really much closer to the investor, and you have a really clear obligation to those investors, and that requires good communication and good relationships and good strategies to communicate well, which is why I talk to ACB News, because it's a great way of communicating to people who are largely Chinese language speaking, who I couldn't talk to otherwise.
Thank you so much. Is the mining industry doing enough to attract the next generation, and what could help draw more young talent?
Yeah, that's a great question. For my sins, I had 6 years on the board of the ASM, which is the Australasian Institute of Mining and Metallurgy, which is the peak body representing professional mining professionals in Australia and New Zealand. Really there's AusIMM members all over the world. Okay, what does the future workforce look like in mining, and how do we attract people into it, has been a constant conversation. And I think the current situation where climate's obviously a big issue for society, particularly young people. We need to show that mining is actually the answer to this problem, not the it's a solution, not a cause. Because modern mining is high tech. It's increasingly exposed to AI and robotics and you name it, which we're always trying to make it safer and more cost effective to do. So there's great opportunity. The real issue fundamentally is you've got to go all the way back to school, and we need boys and girls studying STEM subjects, so science, technology, engineering, and maths, because it's only then that they're going to have the basic skills to go to university and do an engineering or that type of degree. And then we've got to get these young people to see that mining, the resource industry is what it is, and that is providing the raw materials to build the society that we need. And, you know, without mining, there's no sustainable energy. There's no energy at all. Right. So, you know, my challenge to the young people is, you know, it's easy to be against things, but what are you for? Right. And do you want to make a difference? You know, even, I know, environmental scientists, who are very pro climate and environment, and as they should be. But you make more difference inside the industry than you will outside. So get on board, you know, study engineering and maths, and we would welcome you to the industry.
Thank you so much for sharing today, Colin. We're looking forward to seeing you again, and we wish you all the best in the future.
Thank you very much, Hannah.
Thank you.